I think OTC is particularly important now because over the last 20 years there's been a series of different trends which have completely changed the nature of what compliance needs to do and how they surveil the market. And probably the single biggest trend over the last 2 to 3 years is the transition of many tradable instruments away from the OTC market onto electronic trading platforms, onto exchanges. So it's brought in a whole raft of new contract types, some quite exotic, that compliance have to understand and have to monitor. Most compliance people have, I guess, learnt their trade during a period where the focus was purely on exchange traded instruments. Now they're having to, completely broaden the nature and the scope of what they look at, to look at basically products like FX, like fixed income derivatives, and that is a completely different market. For a start, you don't have market data as we know it. So you're trying to reference products within a marketplace where there's no reference data as such. So that has completely changed the nature of what compliance needs to monitor for, and it has added a whole new level of complexity. I think they are ready. I think it's probably the single biggest trend in terms of Dodd-Frank, in terms of MiFID II. It has brought, the pressure now on compliance is to monitor these instruments which were previously effectively out of scope. So they need to put in a systematic process now. I think in the past, a lot of the monitoring of FX and fixed income products was done via manual processes, via spot checks, but now that's simply not sufficient. So they have to look at putting in place a platform which systematically monitors, applies market abuse type scenarios, market manipulation type alert scenarios, because again, that's the focus. One, we've got these OTC instruments that have now moved on exchange, and then for those products that are traded away from the market, you need to have a platform that brings in, I guess, any available form of reference data, market data, and the ability to consolidate that so that you can get a picture of what represents fair pricing or not. Well, it is. It's certainly in the case of smarts. It's been probably the single most significant development that we've put significant resources into over the last 18 months to 2 years. We've rolled out and have deployed now a monitoring platform that monitors the global fixed income space. For the FX market, we took a different approach. We brought in a whole range of our customers and took the approach of working with them to identify what the priorities are, what the challenges are, what the difficulties are in putting together a systematic mode of surveillance for FX. And coming out of that, in the middle of this year, we launched our FX surveillance platform, which has the benefit of pulling in all of the expertise of all of our customers to develop a surveillance platform that meets the very specific monitoring requirements that they have in the FX space.